Thank you very much for having me here. I'm based in Toronto. I'm a pension actuary by background, but I'm spending most of my time now on sustainability and climate change, a lot with the investment business, but also across our lines of business. And I want to pick up the theme of the role of consultants. So I think that consultants do have a role to play and have huge opportunity. Mercer itself, we have 4 key lines of business: pension, health, talent, and investment. And when you think of the potential across those areas where we touch employees, linking the health impacts and financial security impacts of climate change and environment issues to the design of benefit programs and to the health and wellness of the employee, and talent, I think huge opportunities there in terms of employee engagement, rewards, incentives, culture change, and change management as companies are looking to whether it's change their business model, no matter how significantly. I think there's huge opportunities for companies and as well consultants that are in that area. So I spend a lot of my time engaging colleagues and leadership around our potential in that area. And on the investment side specifically, we have a strong responsible investing team headed by Jane Ambachir, who many of you may know. She's based in Toronto. And they've done a phenomenal job in terms of embedding that throughout our organization. So just the first key step, Mercer Investments, we have our own set of investment beliefs. And just last year, sorry Mary, next slide. Last year, sustainability was added as a core pillar to that. And that's quite significant. So when mainstream investment consultants are talking to their clients about investment beliefs, that is right there as a key component, and that's that ESG risks and opportunities have a material impact along with active ownership and engagement, and that sustainable themes and long-term views can add value. So not that Mercer imposes our beliefs on our clients, but it's important that it's in the discussion right from the start. Secondly, and sorry Mary, there's a couple of builds in here, so you'll just have to watch. But secondly, so this was rolled out to consultants and also to support their discussions with clients who did want to take that sustainability angle farther. The responsible investing team rolled out to Mercer consultants worldwide sorry Mary, next slide, our framework for sustainable growth. And one more. And this, not surprisingly to the folks in this room, starts with beliefs. What are the beliefs, particularly around the discussion today is around climate risk? What do the various stakeholders believe, whether that's the committee members or members, beneficiaries, and other stakeholders? And once that's landed on, and that can take education, stakeholder engagement, discussions, the processes, what are the resources available or resource constraints, what are the providers already doing, and how should those beliefs be realized in the investment process, and then moving to portfolio. Next slide, I guess demonstration of our commitment around climate change. Mercer Investments, on behalf of our delegated services, which is $100 billion of assets under management, signed the Global Investor Statement on Climate Change, calling for a price on carbon, and building commitment to building capabilities. And that's one thing I want to talk today on is, next slide. In 2011, Mercer, as many of you may know, did a climate change and strategic asset allocation study. I think it was groundbreaking at the time, brought a lot of focus to, or attention to the discussion, and it really focused on 3 key risk factors. Policy, how policy may influence the valuation of assets as well as driving innovation. Technology, and that's the pace and scale of investments into clean energy efficiency, which we've heard about, and the physical impacts. And the physical impacts, we're seeing some of them today, but the more significant ones are going to be out beyond 2050, and we need to obviously shift gears before we get there. Next slide, and again, you might have to click a few. So the key findings, not surprising to this group, that climate risk can be and is a risk. there are sustainable themes or options available. And we listed a number of recommendations which you're already implementing: engagement, sustainable themes. Now we're doing an update to that study. At the time when it was rolled out, outside of the partners that were involved, there wasn't broad take-up, which is, I guess why we're having some of these conversations today. So we've got another update to the study underway, and we're really going to focus on implementations. We've got about 15 partners representing over $1 trillion of assets. And most importantly, obviously, the partners that are involved are doing it for their own benefit, but also so that we can roll out the fruits of this labor and really make it implementable, not only for these large sophisticated plans, which really represents the type of partners that we're involved in, but again, back to Mercer's objective to build capability within the broader Mercer consulting group, as well as leverage the broad capabilities we have. We have a huge research team, and we want to have that sector level specific research really focused on some of the transformations that are already underway. And since, sorry, just click in one more. Since 2011, there's been a lot of momentum. So there's increasing awareness and demand or activism for that side, but also increasing information. So just one more click. There's no end to the amount of great work being underway, whether it's the high level, what is the global impact from the Risky Business report done in the US, or the Global Commission done around new carbon economy, which really, I think, was an important message that's gotten out. A lot of these reports have been very high profile, and the new climate economy is just an excellent story that we can, if we focused on land, energy, and cities, we can build the investment and transformation needed to meet our growing demands in urbanization and also address the climate problem. So going into our 2015 study, we're in the thick of things now. We're keeping the same framework. Obviously, policy and technology are critical. A lot of our investors are quite interested on the physical impact side. We're taking a more granular approach to real assets, and we're splitting the physical, sorry, Mary, wrong slide. We're splitting the physical impact between catastrophic events and some of the sort of catastrophic one-time events versus the longer-term weather patterns, whether it's drought, temperature changes that can impact agriculture. There's a lot of interest on distinguishing those two types of physical impacts. So we're looking at 3 emissions pathways, one where we don't even meet Copenhagen and don't get back onto that path, and then one where we do meet the Copenhagen commitments, and then beyond 2030 we even get more aggressive. And we have now added an emissions pathway that's in line with 2 degrees. The partners were interested in that. Some felt that we're beyond that. We're not going to meet it. But I think it does give us all a real focus in terms of where we need to get to. And the deep decarbonization project that Jeffrey Sachs has done, and the 2 degree investing team, there's a lot of sort of good research on what exactly does that look like from an energy transition perspective down to the investment portfolio level. So our key objective for this study is to really bring tools and capabilities to our broad client base that can be used by investors at different sizes and different sort of levels of awareness. Having sort of newly come to this topic, it does take a lot of getting up to speed. And just to wrap up, tools are evolving. Next slide, very quickly. FTSE is looking at developing a very detailed, well, they're well along the way, close to rolling out detailed data on how far along we are to the low carbon economy. MSCI has got data. Carbon Tracker has raised huge visibility and given detailed data around fossil fuel companies, Bloomberg, obviously, and Mercer McLennan. We've brought together not only Mercer capabilities to this project, but also our catastrophic risk folks from Guy Carpenter and Marsh to look at the real assets and the physical impacts. And then, of course, the investor initiatives, and I think this is, back to the desire for our partners to have a 2-degree scenario in there as a benchmark and something to move towards. There's great initiatives, the Montreal Pledge, where investors are pledging to disclose their carbon footprint of their portfolio. That brings not only transparency, but greater awareness for the fund itself. Moving to commitments to decarbonize the funds. And just yesterday, you may have heard that University of Sydney in Australia has announced a commitment to reduce their carbon emissions by 20%. So I think that gives not only a target and a goal, like investors have been engaging companies to do, but it also brings focus on where are the material parts of a portfolio and can drive initiatives in that regard. Thank you.